In our first story, Fitch Solutions is forecasting a 43% depreciation of the cedi to the US dollar this year. The research arm of ratings agency Fitch is also projecting a 30.1% fall in the value of the US currency in 2023, which means the woes of the local currency will not get better anytime soon. Fitch disclosed this in its latest report on Ghana. Here's Charles Nixon-Boy's report.
The cedi has since the beginning of this year lost about 36% in value to the dollar, according to Bloomberg. It depreciated by a little over 4% last week, starting this week at 10 cedis 10 pesos to the American currency. This has drastically shot up prices of some commodities, increasing both the cost of doing business and living in the country. Fitch Solutions said the continuing investor concern over the country's large fiscal deficit put downward pressure on the cedi. Again, the currency's weakness will keep revenue risk elevated for foreign investors dependent on revenue streams in local currency. This is despite an expected $2 billion inflows from the Afrexim Bank and Cocoa Board syndicated loan. Furthermore, it said in the light of reliance of Ghana's construction industry on imports, the cedi's weakness will add to upward pressures on prices of construction materials from existing supply chain disruptions. This, in turn, will further contribute to increased project costs and potential investment delays in the near term.
Well, in the course of the bulletin, we will try and engage research lead at GCB Capital, Courage Buti, on what to make on this current projection from Fitch Solutions. I'm going to try to speak with Courage. Hopefully he's on. Courage, good afternoon to you. Can you hear me? Can you hear me, Courage?
Yes, I can hear you.
Oh, great. So what do you make of this prediction by Fitch that by the end of the year would see the cedi decline 43% to the US dollar? How probable is this, based on current circumstances, I should add?
Well, as things stand, we've already crossed 35% depreciation to the dollar, and so 43 is not far-fetched. And if you look at the fact that there is pent-up demand on the market, and then, yes, there are talks of liquidity injection in the near term, but the question is, are those sufficient? And will it meet the needs of investors and assuage their concerns? Those are questions that we do not have immediate answers for. But given the market dynamics as it stands now, the sustained portfolio reversals, the increasing import demand, and of course, the market sentiment that is fueling speculation, and the many arbitrage opportunities available, it appears that 43% end of year will not be far-fetched.
And latest data from the Bank of Ghana shows demand for dollars by dealers outstripped supply by $84.5 million. That's at the last auction. This is a reduction of the $105.25 million recorded during the last auction a fortnight ago. But then there's still a problem of high demand, especially as we are headed to the festive season. So it makes you wonder if we are going to get out of this.
Well, yes, I mean, so the demand levels could fluctuate based on the market needs at any point in time. But the fact remains that there's been excess demand. I mean, for the last few auctions or so, I think since Q2, there's been excess demand. Bank of Ghana never really met the demands from, say, the banks or the BDCs in total. I mean, it's always been what the target is. I mean, and that is what they allot. So it's all of those excess demand goes back to the spot market. It is part of the reason why there is the pressure. What we've noticed over the last 9 to 10 weeks is that unlike previously, the Bank of Ghana hasn't done any spot market interventions. And so it leaves the demand deficit quite obvious, which is the reason, or part of the reason, the cedi is also plummeting quite fast on the retail market. So you can see that it's a bit controlled on the Bank of Ghana's interbank market. But then if you go to the retail market, then it's falling quite faster because of the lack of intervention on that market segment, really. So if that trend continues and going into the festive season, and of course, the seasonal demand pressures will come in, and that is what is making that 43%.
And some economists, they are expecting the rate of depreciation to slow down as a result of the Cocoa syndicated loan and the Afrexim Bank facility, which we expect to come in But also, again, makes you wonder for how long, looking at the current economic circumstances we are in.
That will be 2 billion hard currency injected if that money comes through, which is a significant addition, I must add, at this point in time. What that does is that it helps the Bank of Ghana strengthen their market surveillance and interventions, and then at least improve spot market presence, which will help at least stabilize the cedi around current levels. But between now, you know, the Cocoa Board is now doing a roadshow, an announcement probably would follow, but the money is not dispersed in bulk. It actually comes in tranches. I mean, and it will start coming in, I believe, from October, November, thereabout, right? What that does is that at least the news of it improves sentiment. But between now and whenever those flows will start coming in, and I understand the Afri-Exim loan is coming maybe tomorrow or Thursday. Now, if that is the case, we could get the positive news effect and actual flows supporting the cedi in the meantime. And between 35% and 43%, it's not too distant. So we could still go a bit higher, but you know prices are sticky downwards. And so even if the liquidity comes through, chances of we regaining some of the lost value of the cedi between now and end of the year might be quite slim. And if there is some correction, it will not be enough to erode most of those losses already, really. So the outlook is still quite pessimistic, even if the interventions come in. At best, it will help stabilize the cedi around the current levels.
Outlook still pessimistic. Thanks so much. Research lead with GCB Capital, Courage Boutique there, joining us with some analysis on the currency.